Auto rates have increased drastically over the last probably 2.5 years, and there's almost no signs of it stopping. Today we're going to answer the question, is 2024 the year that the car insurance rates slow down and stop increasing? Let's dive in and go over some of the reasons this is happening, some of the things that it is fixing, and some of the things that you can think of how to fix this yourself. So you're probably in the same boat that I'm in, where you're looking at the market and you're saying, okay, I get it. The market went up 10, 20, 15%. Then why is my insurance going up 30%? And how come, because the market is slowing down, the interest rates are coming back down, why am I paying more for insurance than I was 3 years ago? Forget 3 years ago, look at 2022 in November to 2023 in November. It was averaged to be 19+% of an increase. And we get it, everybody's telling us the insurance companies are losing their money, they can't figure it out, there's just so much losses and blah, blah, blah. Then how come I'm seeing other companies show a profit? How come Geico? How come Chubb? How come all of these companies are saying that they're doing well? Even State Farm lost $6+ billion, but they profited on the auto. Then why is my auto going up? Let's understand a little bit more specifically what's happening. So I found this really good article from a company called MarketWatch, and they did a really good job on this one. I actually loved the stats that they included. Some of the neat things that really caught my interest, because I always just assumed that the new purchase of vehicles was such a big impact. And it was interesting to see that was only about a 1.3% increase between old cars to new cars. People purchasing new vehicles in the past to people purchasing new vehicles now. The price rate increase has not gone up that significant. However, what we have to take into consideration is the cost of maintenance. In our world in insurance, that's the cost of repairs. The cost of maintenance is what's causing the biggest impact from the new cars. That has increased 8.5% from the previous years. Now that isn't the whole 30%, and actually the older cars weren't as bad either. Their cost of maintenance wasn't as high because a lot of those old cars weren't produced at the time that the parts were needed. So now there's an influx of parts for older cars and a shortage of parts for newer vehicles. So let's talk about the 5 factors that have caused this rate increase to happen. The first one is inflation. Inflation in the last 12 months-ish from November has increased 11 times. That's a crap ton. It's a lot. Now, it actually hasn't grown as much as I personally thought, but it's still pretty large. In total, the max that the inflation hit was 9.1%. The second factor, and one of the larger factors, is the repair cost is up 36%. Remember how we said those new cars have a higher maintenance? Well, all of the new cool technology that has some beneficial, they're still protecting us, and the blind siding and all of that and the automation, great. But it costs a lot more money to repair that same vehicle than it did my 1995 Honda Civic. And yes, I did have a 1995 Honda Civic at one point, loved the car, put some TVs in it, I was a pretty cool guy. The third piece follows that, which is the scarcity of parts. Oh, Mark, scarcity of parts, no, that's just BS. It's not, because we're talking about 2020, right? The pandemic happened almost 4 years ago. When that happened, manufacturing essentially stopped. People didn't go out and drive, so cars weren't purchased. Assembly lines were stopped. People were laid off. The whole thing shut down. Now, it came back, but what happened was in 2023, we also had a strike. So as the part manufacturers were starting to come back, starting to get back out of this funk, you got to remember, some of these companies, these smaller companies that were manufacturing parts and materials, even getting parts from overseas, which we all know was a huge thing that stopped then, they went out of business. So now it's a lot of your mid-sized to larger companies that were trying to survive. They're holding on, getting as much money saved up so that they can come back strong. Then hit 2023, where UAW, the United Auto Workers, went on strike. And that, again, stopped a lot of companies from producing parts. People weren't working, the parts were scarce, and that is kicking in 2024. The fourth factor is our health coverage. It's not so much that we're covered correctly, it's the fact that we're having more health issues, especially in car accidents. And in car accidents, even though we're having more medical claims, the cost of medical has increased significantly. In 2020, it went over 20% of an increase. 2021, it went over 3% higher than that. 2022, it was over 4%. So you're seeing this trend where, yeah, the pandemic obviously caused a big increase in medical, and we focus on a lot of stuff there, right? We know where that 20% increase came from. the 2 and then 4, and then hopefully in 2023 it's not going to come back with a higher number, which I honestly think did, because we're seeing this trend of the medical being more expensive for those cases. And then the fifth reason that your car insurance has increased is the climate change. It's the severity of claims and the unpredictability of climate. So more houses than cars, but that still affects your vehicles, is there's more natural disasters now than they predicted. And this has happened 2 years in a row. And now that they're using these predictive models to say X amount of hurricanes in Florida, X amount of earthquakes in California, X amount of wildfires in Texas, X amount of floods in Texas, like all of these states are seeing some of these pain points, and they're not predictable anymore. They're just so far out, and the damage that they're causing are killing the insurance industry. You got to remember, most states, they don't allow the insurance companies to file against the customer if there's a claim that is due to natural disasters. If it's considered a state of emergency or what we call a catastrophic claim, the insurance can't raise the rate because of that. That's one of the benefits that these states have given to most insurance companies against them for the customer. So how do I keep these costs down? And by the way, I want to give credit to the Market Watch, because usually the articles aren't so amazing, but this one was so good, I just wanted to mention them again. The other part is I didn't see them asking for everybody to do a quote. By the way, if you're looking for new insurance, I'll put a link in the description below. Work with one of the agents that I work with. So the best ways that they said to look for discounts, and I agree with all 5 of these, is number 1 is to look for additional discounts. You would be shocked how many people are missing some sort of a discount. I'll have a video at the end that goes over that. Number 2, be smart when shopping. Don't just take the cheap deal. Don't just take the loss of coverage. Talk to an agent or understand your coverages, which we'll link another video that helps you understand what coverage you should carry, and then figure out how much it should cost. Number 3, increase your deductible. When all else fails, that is an option. It's more out of pocket for you, but that's the point of insurance. It's risk. You're essentially paying for that risk to come down. Not that the risk itself is lowered, it's just the amount that's paid against the risk if there is a claim. Number 4, it follows with number 3, is choose lower coverage. Now, I don't love this, because I think what happens in most cases is a lot of times the companies aren't just the fit for the right person. So if your rates have gone up more than that 20% or it's been significant, then that usually means that the company that you're with might not be the best fit. Then I would say go to link in the description below, fill out the quote, talk to one of those agents, because they work with 5, 6, 7 different companies that can shop them around for you. You're not having to call 7 people, you just call one person, you talk to them, you get the quote, and then they can tell you what's the best fit for your scenario. That's what I would do first before I would lower your coverage. Then I would look at lowering your coverage as an option, because it's got to be affordable. If you unfortunately can't take the risk or the affordability, I'd rather have you have a lower coverage and be able to pay for it than not have any coverage at all and then have an accident. GoFundMe only goes so far, and there's been so many of them that so many people don't get funded or they don't get that help. Yeah, everyone will pull together and help you out in a pinch, but to replace your entire house or replace your $30,000 car, it's fairly rare, because too many people have used it. And the 5th way is to bundle your home and your auto, your renters and your auto. Usually it's the same discount, so if you're a renter or a homeowner, usually it doesn't matter. You're going to get the best deal if you bundle those. Now there's a ton of other discounts like telematics and different policy sharing and different programs that you can go for. That's really what your next option is to look at. If you're trying to understand the coverages a lot better, then check out my Car Insurance 101. That's going to go a little bit more in depth on the coverages you should carry, and then the discounts would be next. I'm Mark with Think Insurance. I'll see you in the next one.